So what I'm just going to be going over, just for anybody who is interested in learning how to trade smart money concepts, institutional trading, supply and demand, with an easy and a simpler method. I personally use Renkos. I get a lot of questions in reference to what they are, how am I using them. For me personally, it simply is a way better indicator or usage than candles. It blocks out all the noise. I'm able to see price action much clearer, and I can see the trend much clearer. And in reference to smart money, it's also easier to see that as well. So I'm not going to go into like one of these little instructional videos and so forth. I'm just going to be talking myself as to how I see the markets and what I'm looking to do and why and so forth. So these are mean Renkos. There are a whole bunch of different Renkos that's out there. These Renkos here, I'm not being paid or anything like that, but they are from this site here, OVO. There we go. Let's see if we get it come up. So OVO.cz is the name of the website which I got these Renkos. They are product under products. And then you go here, they have a different bunch of indicators. They got Renko bars, range bars, mean Renkos, things of that nature. But the mean Renkos is what I have here. And also this free utility is the Omni Remote, which is what allows me to go from brick frame to brick frame, which will be this right here. So 60, 120, 240, it jumps. It doubles whatever the number that's currently on. You can also put in your own. These represent different time frames. What I like about these Renkos is that there's no ATR settings and so forth. The way they designed them is so that it would pretty much mimic or look as close as possible to the actual chart. So let's just go back here. This is the 1 hour chart here, as you can see. And so you have down move, up move, down move, and so forth. So if I go to this chart, it looks very, very similar. So pretty much what's going to happen is that this chart is going to move in almost 100% or it's very similar fashion to the way the charts move in that timing. The difference is these Renkos are based off of price, not based off of time. Candles, you're going to receive a different candle depending on the time frame you're on. If you're on the 1 hour time frame, every hour you're going to print a new candle. This is based off of time. So for instance, we have a 120, take off the zeros, 12. You double that number, each brick is 24 pips. So every time price moves 24 pips, then it prints another brick. So I use the term brick instead of candle, so that way I'm able to understand the difference between talking about a candle and talking about the brick. When I go between the actual frames, instead of saying time frame, I say the word brick frame. So this 120 brick frame represents the 1 hour on the candlestick frame. Okay, so now smart money concepts, of course, we know institutional levels, basically supply and demand, liquidity, and things of that nature. It helps me get these sniper entries. So right now we understand structure. I do understand structure. We're creating, well, let's go from this point right here. So we're currently in a downtrend. We know this because we're making low highs and lower lows. And this is the one leg in range in which we would trade in to take a sell, right? So we know this. If you took a Fibonacci out, but we see that we've broken the previous lower high, and so it is indicative that we are possibly, when we are going into, we are in an uptrend. So let's see, a 240, yes, on a 240, which represents a 4 hour. No, I think the 120 is a 4 hours. This may represent the daily. Let me just see. Go back to the daily and see. Yeah, so this is, you see this right here? This is the daily. So the 240 would represent the daily. So the daily, we currently are in a downtrend. Institutional trading is when we're looking for the last up move before the down move. The IFC candle that produces the supply zone for instance, looking for a sell, what it normally does is it breaks structure, which is right here. We see that structure was broken. I just use this here. We had a nice little break of structure here. We have a nice change of character here, which is indicative that the trend is changing. So change of character and break of structure are similar but different. Change of character shows that the trend is changing, where a break of structure is a break of structure and a continuation of the trend. We see that price was made up pretty much a high high, high low, and high high, but then it changed the structure and it broke. Okay, so something real quick. So price has come down, has broken some structure here. Did a retest and came down again. So price most likely will be coming into this actual demand zone right here. Not demand zone, but supply zone. So that is what I'm looking for. I'm actually going to put this up here, do the whole thing, and this is a daily order block, and it's also a sell order block. So that way we know which direction. Because it's red, I know that it's going to be a sell. Okay, so that's just that from a daily perspective. So now if I go down to the 4 hour, this is where we're actually looking to be at. We can refine this down probably up to about here, which is probably the wick on the actual daily. Yep, right in the wick area. Let's just put that right there. So that's what we're looking for. Sorry about that. So I'm looking for price to come back in here and then to continue its downtrend. From a Fibonacci perspective, we do know that anything above the 50% is a nice premium, and it runs right into, let's say, the 886 area. We may come up to the 79 right here. It's very possible, which we're very close to. Whenever I see wicks as well, let's leave that's very big, of course, but once we drop down to lower time frames, we're able to get a better entry. But anyway, so let's just say that whole zone itself is what I'm looking. Once we tap into that, I'm looking for a sell. All right, it's the daily. This just understanding from a high time frame perspective where we are, what's going on. We are in a downtrend, not looking necessarily to trade off of it. So if I go back to the 120, what do I see? I see that price has broken this previous high, which is really let me know that we pretty much are we're heading into an uptrend. So something, a little nugget that I had just read as well, is that when a supply or demand zone is actually broken, it actually tells you who's in control. So this was a nice demand zone that most people are looking to take sales off of, and for a small amount of pips, it actually did. It actually broke it though, but it actually did respect it, and then it violated. So it wasn't really a strong push. So we did see a reaction to it. That's what we saw, a reaction to it, and then it started pushing up. So we see that buyers are in control, so demand is what's in control. So really what I'm looking for is a buy, and I'm going to be looking at unmitigated demand zones. And so what I like about these Renkos is that it's a nice, you're able to see clearly where these order blocks are. So the last down candle before the nice strong up move, which broke structure right here, would be this candle here. So nice simple way of actually seeing where my order blocks are. Okay, so as I'm going up, I'm looking for a nice maybe a sell to come back down to one of my demand areas before continuing to push upwards. So let's say probably right here would be the next area. I'm looking for some type of reaction. And as we can see, price has already tapped in and showed a reaction off of this particular order block. Okay? And so I want price to come back down into, most likely probably down in this area here. And I can just bring this spot up here. And if you're wondering why am I doing these things, let me just break down a little bit the Renkos. So these wicks, the mean wicks, you have to have the wicks because they mean something. They represent on a lower brick frame or time frame, since we understand time frames, but a lower brick frame, higher highs or higher lows, and so forth. So this right here was a lower high that was actually broken on a lower high and a lower brick frame that was actually broken. This is actually another lower high and it's actually broken. So these wicks as well, they represent, of course, you can see structure, higher lows, higher high rather, higher high, higher low, higher low, higher low. So this is a lower high. This is a lower high. This was a lower high on as well. Let's say back here, these are actually lower highs on the lower brick frames as well. So when price came like here, this lower high from on a lower brick frame was actually broken. So instead of me always going back down, let's see, I can do this. I will draw a line right there and let's just go down and see where it is. There it is. And you can see it's a lower high. So it's real simple. Because of the fact that you don't have a whole bunch of candles and you have to go through different time frames and so forth, you just know that that's what they represent. So again, you can see the price action structure as far as demand and supply levels, and you can also see patterns, chart patterns. You have a nice W, you have a nice divergence ascending M, you have a, it's not even a double bottom, this is a double bottom here, and this is the second leg of the W for you market makers. So you see all that. I think you can even see some head and shoulders depending on the time frame that you're on, but you can see all that very clearly. All right, so back to smart money, Natasha. So price has come into our 4-hour order block. So we know it's 4 hours, so we know it's pretty strong. So even though, you know, you may not catch a massive amount of pips, you can catch a great number of pips. So I know if I was to take this trade right here, I can bring it down to this area, that's 70 pips. Bring it down here, it's 130 pips, which is actually great, depending on your lot size. Because this is a large 4-hour supply zone, which is 50 pips, I don't really tend to take trades right off the bat. Most times I do set limits just to take the trades, but I'm going to go into how I would use a confirmation to enter this sell trade particularly. So this is the 4-hour. So let's go down to the 1 hour. See, the price has came in. We have this area here, which represents a higher low, no, a higher high. So the high low, sorry, higher low on the lower time frame, as you can see. So price came up, higher low, higher high. So you see how that works. So we have that area there, but I want to go down. So this is the 1 hour. This represents probably about the 15 minutes or so. This represents the 5 minute, and then we go down to the 1 minute. Let's get to the 5 minute. Let's work on the 5 minutes. So now we know that I'm inside of this 4-hour POI, 4-hour demand, supply area, right? So we have initially change of character or break, right? This order block here. So price has come down, change of character, then has come back up into the actual order block. So it's okay to take, it's aggressive, but it's okay to take a trade off of a change of character. In a sense, some people wait for a break of structure, but when you start seeing a change of character, this is how you get in on the top, at the very top. I personally don't. I want to see something more. So we have that one break, then we have this break as well, these two. So I like to use this long leg. It's much more clear. That's actually breaking. So we broke 1, 2 higher highs, right? So what happens? Of course, price comes back into an order block. And what order block would that be? It would be the one that actually caused the break of structure and left some inefficiency, imbalance here, and that would be right here. Now, when I didn't use the whole candle because whenever there's a long wick as an order block, most likely price comes back in and either taps within the range of the wick itself or maybe just the bottom of the candle. It's not going to come all the way back up. And so what does price do? Price comes down and it breaks this right here. So we can call this really, this one move here and back up and then down, we can call this really a change of character. If you want to look at it from that standpoint, a much bigger picture than just using the actual wicks, which would be safer, some more of a safer method of doing it. So you can call this a change of character, come back up into the actual order block, and then it breaks the structure. It breaks, and then what does it do? When structure or change of character is always broken, it always goes back up into an order block. So if you didn't take this trade, you could have taken this one, and then price actually plays around here, and then what happens is we have another break of structure. This is where I'll call this the break of structure right here. And what is price probably going to do? It's probably going to come back up into this order block. Now, I don't foresee it coming all the way back up here. Again, I'm just going to use this wick here. I could bring it all the way up just in case, just to see. Now, this is a 15-minute, a 5-minute chart. So that's only about 5 pips, which is not bad. And so what's going on now? This price is actually taking out liquidity. So now the order flow is that we're showing bearish momentum. So I'm only looking for sales. So from at this point, market is closed. Let's see. But if I want to go down to like the 1-minute chart, this is something that's very interesting because now we're talking massive risk to rewards situation. So let's just take all of this off right here. And really see what's going on. All right, so price again, as we talked about before, you see this nice head and shoulders pattern, left shoulder head, right shoulder drop. So if we want to go for chart patterns, then price comes back up into the supply zone that was actually left behind, and there goes. You look at this entry. So you've had pretty much not even a pip of drawdown, if you want to look at it from that standpoint. And this is why I like Renkos, because you can see very clearly where you should actually draw out your supply and demand zone. But let's just break this down from a 1-minute perspective. We came into this 4-hour supply zone. We're waiting for some type of confirmation that the sellers are going to take control. So what happens here? So what happens is we have a change of character right here. Of course, we have one change of character right there. You can actually even break that down, put those two right there. Price comes back up. Price comes back up into the order block. There we go. So how many pips is this if you would take this trade right here, put a limit there? That is like 1 pip. Price comes down and actually breaks the structure. This is the previous structure, the previous higher low. And then what it does, comes back, it creates liquidity. So we have some liquidity down here, even though it's right here. And then what does it do? It comes back up into an order block. Look at that. And then price comes back down, it breaks the structure and goes back to its point of origin. Now, since I am on the 1-minute, if you refine it, just like with the candles, if I refine it too much, I could miss out on the trade. So you see here, it taps it beautifully. I mean, to the pit. But because of my spread in the broker, I most likely would not have been tagged in. So what I would do is I would use 2 bricks. Because technically, even with the 2 bricks, I'm only looking at 2 0.7, not even 3 pips of stop loss. And actually, what does price do? It comes in not even 1 pip and draw, and then comes down. It doesn't break, but what happens? What does it do? For me personally, it does break all of this liquidity right here. In a sense, small break of structures, so minor structure break. So I could personally use this if I didn't miss this here, if I didn't make this entry, and come back in to this particular order block. So price comes, taps in, still not ready to break. And when price comes into an order block, and you see here we have a nice little break of structure, but it doesn't give me a nice push down like here, it's not finished with the order block. We know the order flow is bearish, so we know price is not looking to come up above these highs here. So when price comes back in, again, comes back in, taps it, 1 pip. Now, a way to confirm, instead of getting in on a sell limit with Renkos, usually I used to get in just at the close of the candle. Close of the brick, I'm sorry about that. So that would be a nice confirmation right there, and just let it ride. And the same thing you could have gotten in once price tapped in, showed the rejection wick and closed. That could have been an entry as well. But looking for those sniper entries as well. You know, getting inside of the actual supply order block itself is the key for smart money traders. So again, so this would have been an entry if you're waiting for a confirmation. So price taps in. So technically, if you did use this here, it really wouldn't make a difference, because if you're waiting for those confirmed entries, you're waiting for the brick to close anyway. So the same thing here, price comes in, taps in, and you enter right there once the brick is closed. And then it's coming down. We're still coming down. So right now we're looking at a change of structure, a change of character rather. And I actually see 2 of them. So you got to change the character here, but really you have one right here. So you have 2, price comes down. So when you have a change of character, especially when you have 2, so remember it's on a lower brick frame. This is a lower high. It's actually been broken. And then it is even came up. This wick here also was bullish at one time. So just actually put this down in the middle. Try not to make it too long. And then what happens when you have a change in character and 2 pushes showing that there's bullish pressure, price comes back down into the order block right there. And that's what's happened. It came back down and pushed, and this is where we currently are. So this is how this actually all works. This is how you go with the order flow of the market using smart money techniques and using Renkos. Like I said, for me personally, it's a much clearer picture, much easier to get into. You know your actual stop loss. You know what sizes you can just see it clear, very clear, very clear. So from this standpoint, we could have, let's say we did get in from up here. Let me see how many pips would I've gotten so far. Bring it down here, up only 30 pips, which is not bad. But with this risk and reward, you can just, back up the Brinks truck on this one. But into the next video, I'll talk to you later.